Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Monday edition, a full week of sessions today. I don't think anything going to disrupt our regularly scheduled broadcast. Back to 5 shows for this week. I know I've taken a couple days off here and there. And actually, as we get into the tail end of September and October, there will be some Thursday, Fridays I'm taking off. I will be teaching at the Traders Expo in Orlando. I'll also... Where else am I going? I got 2 trips to Florida for October, and then September I'll show you guys later on what I'm doing. It's going to be a fun time. Anyway, Big Ab, you're on vacation, bud. What are you doing over there? Go relax. Go play some golf out in Palm Springs. So today's show is driven by Les Gold. Hey, George, good to see you as well. Les sent in a couple questions over the weekend, and I'm always happy to get your questions, Les. Thank you for that one. Anyway, I would cheers you and say I hope you guys all had a great weekend. I had a very fun weekend. Something I desperately needed is go out and have a good time, meet some new people, make some new friends, and I hope you did as well. All right, so Les sent in 2 questions. Both of them are great questions. It could honestly be a show all by themselves. But one thing we've discussed in this program has been, I guess, the issue with the integrity of data that we receive. As traders or investors, we're always looking at unemployment numbers. You've got things like CPI, PPI, retail sales. You've got all kinds of other metrics and numbers that come out on a regular basis. And we're led to believe that these are credible, trustworthy, and honest numbers. Now, I've mentioned in the past that I have interviewed an individual. It was so long ago, I can't remember. It was probably 20 years ago. And they worked for the Bureau of Labor Statistics, the BLS. And we asked that individual specifically about the data and the reports and I tried to get a sense as to what that role was that individual played and really what that was the role of that agency. And it was great because, you kind of pulled back the curtain a little bit and understood what the job was, right? To clearly convey different pieces of our economy to the consumer and let them use that information for what it's worth. And at the end of that conversation, I asked the individual, I said, do you guys ever tweak the data? Can we really trust? He goes, oh, well, we tweak it all the time. And I was like, well, wait a minute. Hold on a second. He just told me that it's supposed to be held with high integrity and this data is good. But now you're telling me that you modify it. And he even went on as far as to say that they manipulate it depending on a political agenda. So the topic du jour is, can you trust economic data, the numbers that are given to us, whether it's a Bureau of Labor Statistics or you name the different agencies that bring them out, that there are tons of them that do it. And here's the question that came in from Les. He says, I have a question about tomorrow's CPI numbers. Will we be getting accurate numbers? I understand that some reports get turned in late, so we will not see everything until the revised numbers come out or numbers that are to save the job of the supervisor. Good point there, right? Especially with what happened with the unemployment numbers. All of a sudden, you're getting, let's just fire that person and put in a new person because I don't like the numbers that we get. So now are we going to start to see tainted data because these people don't want to get fired? Will the data now be skewed more towards the current political landscape? And that's a very real question that may need to be addressed. So let me dive into some of the key components for CPI. And I'm just going to pick on CPI because that's the one that Les was mentioning. CPI is interesting because it does so many data points. There's 90,000 price quotes in CPI. And what's funny is when you hear that, you're like, wow, they're looking at the price points of 90,000 items? Like that should give us a pretty robust and accurate representation of what inflation is like. Well, the answer is no. It's not 90,000 items. What they do is they are taking 200 items and doing them from a bunch of different areas within the United States. So it really encompasses 75 urban areas. So you get 75 urban areas. They pick, major centers of the United States, and then they look at roughly 200 different products and service categories. So it's really only 200 items. Now, I don't know about you, but I can't think that 200 items would be a clear and accurate representation of the overall market or economy, period, let alone going into each different geographical area or urban area that they're studying here, 75 of them, trying to come up with a nice report here that gives us accurate numbers of inflation. So right away, I don't think that the data clearly or accurately represents what inflation numbers are, right? And of course, we know that might change over time. We know the products and services in here can change as well. One thing, and doing a little bit of research on this for you guys, is there are serious concerns amongst economists and everyone in the financial industry on the latency with some of this data, on how slowly some of the data gets collected, or if there's something new in the economy that becomes popular that should be included, how long does it take for that to then get implemented in here because of just the slow process that goes on at the Bureau of Labor Statistics. We also have other considerations. For example, hey, Steven, we also have questions of integrity because of what's going on politically. Now, as was mentioned here earlier, yeah, there might be actually some bias of the data to help a specific political party, as I was told when I interviewed that gentleman almost 20 years ago. But also, you look at what's going on from a cuts perspective. So there was a hiring freeze going on for government jobs. President Trump also said there's an 8% budget cut to the Bureau of Labor Statistics. So what that means is there are certain positions that may not be able to tabulate or calculate that data accurately. For example, when I researched this today for you, Les, I was surprised to find that in some of the recent numbers that the data had been halted in certain cities. Buffalo, New York, Provo, Utah, and Lincoln, Nebraska the data was halted. And in many cases, what they're saying is that they're giving an estimate as to what the inflation number may be for those specific areas, which, in my opinion, completely disrupts the integrity of that data. So, looking at what CPI represents to you and I, it's supposed to represent the cost of goods and services around the United States to give us a clear understanding of what inflation may look like. The reality is it could be very biased towards specific urban areas because, as I mentioned, Buffalo, New York, Lincoln, Nebraska, and Provo, Utah don't have a number. They're just guesstimating. Like, I drove through Provo, price of a beer went up like 50 cents. Let's just mark it up 50 cents, see what happens. All right, that to me is terrible from a credibility perspective when you're kind of shooting from the hip. Larry says, newsflash, even bias in the courtrooms. Yeah, Larry, the sad reality is that there's bias in everything, right? I think we would all agree that there's bias in everything. We in this perfect world, we would think it's fair, efficient, transparent, but it's really not, right? There's some biases may go to one side of the party, some biases may go to the other side of the party, so I don't want to make this like one political party has the upper hand here. But when it comes to the CPI number, which comes out tomorrow, or the PPI number, which comes out Thursday, I haven't really felt for myself that I can trust those numbers at all for years. Ever since I interviewed that guy on Power Trading Radio, I have a hard time believing that these numbers are fair, accurate, and honest. I think that they're designed to fit a political agenda. So to Les, if you look at the CPI numbers, no, I don't think, to answer your question, which was, will we get accurate numbers? No, I don't believe we will. I believe that they're actually estimating certain data in different cities because they're losing employees, which would normally be calculating this. They also lost an advisory council at the BLS, which was made up of economists that are like verifying and checking and making sure everything kind of seemed in line. They lost that whole panel. So, I'm not going to look at this report that comes out tomorrow and be like, oh yeah, well, this is absolutely true. And I don't think I have been that way for a long time. I think most of you probably think, take it with a grain of salt, whatever the numbers may be. For me, it's more a question of how our market's going to react. So if we look at this number here, here's tomorrow's CPI numbers. We'll do the month over month and I'll switch to year over year. So here's your month over month. Right now, the expectations are that we're going to come out at 0.2, and we'll zoom into the more recent data here to get a better sense. It doesn't feel like inflation has been that wild. It doesn't feel like it's been that crazy, at least according to this chart here. Current number is 0.3. They're expecting it to drop to 0.2. Now, what, in my opinion, is that truthful? Hell if I know. What I do know is the markets are anticipating 0.2. So as a trader, I'm just looking at that. Whether I believe the numbers or not, I'm looking for what that number is expected to be and what the actual number that comes out will be. So let's say, for example, we come out at 0.2%, right? From there, we can immediately start to hypothesize or formulate your plan for it. If we come out at 0.2%, that's actually a pretty good sign. It's in line with expectations. 0.2 times 12 would be 2.4%. That's annualized inflation, which would be near the Fed's target. Sounds damn good to me, right? So what might that mean? That might mean that if we do get a 0.2%, then the pressure could be on for September's meeting to further get that 25 basis point cut. Now, let's go the other way. Let's say that inflation comes out at 0.1% versus the 0.2 expectation. Okay, that is even better. Right? That puts more pressure on the Fed to cut rates. And of course, the markets would rejoice for that. So I think if we came out at 0.2 or even 0.1, you'll probably see a rally tomorrow, would be my knee-jerk reaction to it. Now, what if we come a bit higher? What if we come out at, let's say, 0.3 or 0.4 or anything higher than that? Well, that right away would throw a question into those who have been dovish at the Federal Reserve. Because what that would signify is inflation a little bit higher than expected. Not that it's a calamity. Not that this overwhelming, surge of inflation, but it is a data point that's higher than the previous one. And that may cause a little bit of speculation that the Fed will continue to hold and not lower. Now, of course, we like to look at that CME Fed Funds futures chart all the time because it's just entertaining to watch. Right now we've got I think it was a 48% chance. Let me jump on that one. Yeah, so it jumped to 86%. Wow, that's really shifted. So you have 86%. A month ago it was 57. Now it's an 86% chance we're going to get a 25 basis point cut at that September 17th meeting. Again, if we get inflation numbers surging a bit here, that could change this score. So that's really all I'm looking at, right? I'm just looking at what are the expectations, what's the reality of it. Do I think that the inflation numbers are higher than 0.3 right now? Yeah, I do. It still feels like prices are still going up. Unfortunately, I don't eat at Habit Burger anymore. I'm cutting out not cutting out burgers, but trying to eat a little bit healthier. Turning over some new leaves in this whole process. But yeah, it's eating a little bit healthier. So I can't do that numbers in my head like I normally do. Remember, it was like $8.30 back in 2020, and now it's like 15 or something for a combo meal, exact same everything. I always like to go and see if I can see those numbers increasing week over week over week or month. Anyway. So Les, I think there might be some nugget of truth here to your save the job of the supervisor type of thing. I think that there could be some truth to that. Oops, that wasn't Pilates. There could be some truth to that where based on what happened with the employment data and the firing of the BLS individual, I think there might be some skittishness and people are nervous about it and maybe cook the books just a little bit. So it would not be real on stud mode. How about that? Just feeling good. Got to feel good every now and again, Big Ed. So there you go, Les. That's answer to question number one about CPI number. And remember, this isn't just for CPI. This is the unemployment number that came out last week. What's it, last week? No, 2 weeks ago. Every data point, just question it. I mean, I approach it as every data point is wrong. Right? I don't believe the data that gets fed to me. I'm just looking to see how the market's going to react. And then once the numbers come out, I'm going to simply look at what is the trend happening, right? So to be honest, this sounds like callous or shallow, I don't know, but I don't care what the number is tomorrow for CPI. That number comes out, I'm going to assess how I think the market's going to operate, and then I'm going to jump in and ride whatever trend if I'm day trading tomorrow. And I do have some time in the after my class tomorrow morning, so I might do that. But it'll really just be go with the momentum that the market will present itself, right? I'm not going to try to anticipate it too much because, as you guys know, if you anticipate a market action, it could clean your clock if you're on the wrong direction of it. So let the dust settle a little bit. Obviously, that CPI number comes out 1 hour before the equity market's open, so that's going to be a good thing, right? You can see here you've got it at 8:30 in the morning Eastern time, so that's 1 hour before the market's open. Perfect. Let the markets digest that. And then you'll see some really wild, I think the first 30 minutes of the day are going to be very telling, which is why I think you should go for the ORB trade. And I did that opening range breakout. Just give yourself 30 minutes for that one to settle, and then I think you might have some really nice trades going on. What do you say? I'm in the wrestling biz, it's called work. Or in the wrestling biz, it's called work. Yeah, I mean, that's all it is, right? I would have used it, you said, in the wrestling business, each of these wrestlers will give the other wrestler a sign that they're about to do something, right? And you know that that's coming. Well, I think that the markets operate somewhat similar. It's our job to read the tells. Fortunately for us, it's very easy to discern what those tells are. It's going to be mainly reflected here on the price charts. So, great question, Les. Yeah, I'm definitely not a fan of the data. I don't believe it. It's just going to come out and we have to roll with it. I like Buy the Drip says, I have a sticky note on my desk that says, trade what you see, not what you think. Totally. And the tough part is when we get this data tomorrow, every pundit, every CNBC expert, Fox, Bloomberg, you name them, is all going to be talking about their interpretation of CPI and how the market's reacted and what they think. Who cares, right? Who cares? Bottom line is the market's going to move one way or another, and it's your job to capitalize on it. So if you look here, this is the annualized CPI number, right? So taking that monthly we just looked at, which is expected to be 0.2%, and looking at that annualized rate, 2.7% is what it is currently at. They're actually expecting it to tick up to 2.8%. So it's interesting. The monthly monthly expectations are dropping, but the annual are actually increasing. So there we go. All right, what did I have next? That was your CPI part. all eyes, I think, were on President Trump in China because we're starting to get more deals put in place with some of the bigger trade partners. Of course, we still have Canada, we still have Mexico, we still have China. That's all is going to be very, very important. And of course, the China one, I think, is the most important one from a stress perspective on the markets. And exactly as Oliver just said, so Trump postponed for 90 days. Yes, there was a 90-day extension on the tariff. Well, yes, 90-day extension on the tariffs with China. And I think it's just because it was supposed to deadline tomorrow, right? We're supposed to get that finality tomorrow and then hike up those tariffs crazy. But what they're going to do is I believe Trump is meeting with Putin on Friday, and I think he's meeting with China here sometime this week as well. So giving a little time extra for this all to pan out. Right now, I think we're sitting at 30% for Chinese goods coming into the United States and 10% for our goods going into China. So that seems like a win. I'll take that one all day long. So Trump postponed. Yep. Trump's waiting for another Nvidia and AMD deal. Well, that's another question I have for you guys. I'm curious what you think about this. I thought about this a lot this weekend, especially when you saw what Nvidia said today. Realistically, obviously business is a major driver of our American economy. We want that to happen. But it seems like for as long as I've been alive, most of the presidents have not focused on businesses specifically, but creating an environment politically and geopolitically around the world where those businesses could thrive. And that usually is in the form of peace or different deals with different countries and getting along. And okay, we can now do trade with you. The more, I guess, calm and peace we have, the more open and freely we can be trading. And I think that would be the catalyst for businesses. And you guys feel free to type in and correct me if you think I'm off my rocker. But in an idealized world, I think that's the way it should function. What's kind of bothering me right now is it feels like under Trump, it's a pay-to-play type of environment. So if you are a smaller company, right, you're a really small chip maker, you can't compete because here comes Intel saying, hey, we're going to spend, or here comes Apple saying, hey, we're going to spend $100 billion on domestic production. And the reason we're doing that is we want to make sure that you don't slap 100% tariff on our semiconductors. Or Nvidia. I don't know if you guys saw the deal with Nvidia. Nvidia expects $3 billion worth of revenue to come from China. They've now, I haven't seen the official document, but the numbers I'm seeing is 15% of Nvidia's profits from China will go to the government. 15%. Aside from regular taxation. Who knows what that would be. But, that to me is Nvidia saying, hey, look, we'll pay to play. We want to deal business with China. It's a massive component for us. And I don't think that that's right. I think that it's detrimental to any startup or some company that doesn't have hundreds of billions of dollars lying around. Now, for me as just a person, I think that is pretty unprofessional. I think that you shouldn't be picking winners and losers based off how much they can pay you, right? Every business should have the same advantage to rise and grow. But when you give somebody like, Apple massive concessions and to circumvent tariffs you're going to give on the whole industry, but Apple's exempt, Nvidia's exempt, Microsoft or Meta, whatever, whoever pays up the money is exempt. Yeah, Steven says the free market is dead, and I think that's my big problem here. I feel like it really is going in the face of a free market economy, and I don't like that at all. Obviously, I'm for business, I'm for success, I'm for growth, but I'm not trying to sound like a socialist or anything as I've been accused of before. But I think every business should at least have the same playing field. This creates a completely disjointed playing field. Now, let's be honest. Would you guys say if this pay to play, meaning you pay for the president a bunch of money to get all these concessions so you can circumvent any tariffs or restrictions that are made, would you say that's good for the stock market or bad for the stock market? I'm just kind of curious what you guys think. Let's see. The $3 billion from Nvidia comes from us, the shareholders. It does, Big Yeah, but here's my retort to that. Would you rather have 85% of billions of dollars or 0% of none of it? Or actually 100% of none of it. I'd rather have 85% of billions of dollars and give away a little bit. If I'm Nvidia, I think this is a really good, I think this is a good move on Nvidia's part. Because now you're getting back in with these H20 chips or whatever the new chip is that may get banned and can kind of push that through, and now you have access to a ton of money. Does it hurt America? The Nvidia deal, I would argue, does hurt America because it's now going to allow China to get the fastest, most powerful equipment on the planet. Now, could they get it otherwise? Yes, they probably could, but now it's a straight shot deal. So, very interesting to see how this is all shaping up. I personally, if you look, when I said equity markets, is it bad for the market? Overall, some companies will get hurt. But remember, what's leading this market up, guys? You know, let's just go, let me go back here and go to NASDAQ composite weightings. Sorry, this is where I'd love to have TJ here to do all this for me. But, you know, let's just go through here and look at our top companies. 14%, the largest single component of the NASDAQ 100 is Nvidia. So if Nvidia makes this deal and says, hey, Trump, we'll give you 15% of our China deals as long as we get to keep 85% of it, and you open the door to us, absolutely. What's that going to do to Nvidia's price? It's going up, folks. If Apple pays $100 billion but can get away from all these 100% chip tariffs or any other issues that might face them, it's going up. So, you know, I'll read the numbers here, and I'm going to do a calculator off to the side just so I can tabulate this. But you have 14.48% of the NASDAQ is Nvidia. 12.65% is, oops, darn it, hold on, plus 14.48. 10.97 is Apple. That used to be number one by a large margin, by the way. And then you have Amazon. Okay, Amazon 7.69. Or 7.69 is Amazon. So just in those top four companies, Nvidia, Microsoft, Apple, Amazon, I'm actually going to throw on Meta here just to have Meta, which is 6.27. That is 52% of the market. That's 52% of the index of the NASDAQ 100. So while I think that many of you are correct, like this is not good from a fairness of the playing field. It's honestly, I think it's terrible from a fairness of market. It's kind of like during COVID, right? Walmart and Target got to stay open, but all the mom and pop stores got to close. That's unfair. In this case, 52% of the weighting of the NASDAQ 100 is in the top 5 companies. And those are the companies that are paying to play. So if they do better business, which they should because they're getting around all this, it actually should support a bullish market. You guys, you agree with me? Does that make sense? You don't have to agree with me, but I'm just trying to like spell it out here as clear as I can. Let me go to the S&P and see what this one looks like. This could be a little bit different because it's a little more spread out. But you notice that Nvidia there is 7.7%. Microsoft is 6.78%. Apple, 5.88%. Amazon, 4.12%. And Meta is 3.36%. Now, this is much different because you see here on the calculator, it's only 27.84%. So all things being equal, if we have this pay to play where big tech is buying their way through all the tariffs and chip taxes, whatever it may be, the NASDAQ is going to seriously overperform because the big dogs are the one paying their way through it. The S&P will probably lag behind the NASDAQ because it's only 27%, right? Yeah, like Gab says, the average will catch up. Yes, it will. Yep, absolutely. Steve says, I did see that 66% of all S&P stocks are over their 200-day moving average. Well, as they should be. You know, look at the S&P 500 chart here. It doesn't get much better than that. I mean, I'd be honest, Steve, I really have a hard time finding out why it's only 65%. Let's throw on a 200-period moving average here to check this bad boy out. All right, so here's this. That's a 200 on there already. I mean, look how far above the average is. If the SPY represents the average, it is so far above that moving average, it's scary. It is really scary, right? I can't imagine it's only 66%, Stephen. I think it's probably more like 70 to 80% are above their 200-period moving average. So there's got to be just a handful that are bringing it down. And what are those companies that are under the 200-period moving average? If you can't prosper in this market environment, they're probably going to get delisted anyway. Get rid of those darn companies. Bar chart had an overbought warning. Well, I think we have one as well, Margaret. You know, if you add in something simple like Bollinger Bands, We broke out of it here on the last week of July. Gap down, almost touched that lower Bollinger Band. The interesting part here that surprises me is how we're seeing compression. Even though it's been so bullish, we're starting to see these Bollinger Bands get closer together, pinching, if you will. And typically once they start to pinch and get smaller, you could get some pretty significant expansion, right? Things typically move in an ebb and flow kind of way where they'll get closer and then they expand. They get closer and then they expand, closer and expand. It must be below its 200. Intel, I think, might be below its 200 period moving average. Because I know you're in Intel. Here's Intel. Intel below its two. Oh no, that's the Bollinger Band. Let's see if Intel's below its 200 period. Intel is officially below its 200 period moving average, right? So there's a rarity, but it's Intel. We know Intel's in bad shape and looking worse every single day. All right, market. What'd you say? U.S. stock market at its most expensive valuation since the Great Depression. Yeah, totally agree. Right? I don't think there's anybody here who would refute that. I mean, look where we're at. We're at all-time highs, or right at all-time highs, and even for the Nasdaq. So I've been saying it. I do think that there'll be a little bit of a correction, but the momentum is still too strong. The political headwinds are starting to look better from an economic perspective. We're seeing more deals made, and the removal of the uncertainty of all the tariff pieces. If we get China, Canada, and Mexico off the board, I think you got a pretty big run. I think the next big factor here is what's going to happen with our little spat with Russia, right? How does that escalate? How does that impact India and China and that relationship over there with BRICS countries? But right now, the tariffs, you take those off the table, I think things might get better and better and better. So interesting to see that 52% of the Nasdaq is 5 companies. That should be really scary. And it's also one of those things like when we see an earnings announcement for any of those major 5 that we talked about, it's really important because if Nvidia has a really bad announcement, it could crater that Nasdaq. It could cause a trigger and almost go into like a program trading type of sell-off if we get really bad news from Nvidia. Oh. All right, what else we got here? I put an Intel chip in my new PC this year and love it, but I'll steer clear of the stock. Yeah, Larry, it's nothing against the chips. The chips are fine. I have a Ryzen chip. I don't know if that's who that is. I think it's AMD. So I have an AMD chip in this computer, and so far it's been pretty good. Knock on some wood. I get to the CPI number tomorrow. Starting a good correction that lasts through September. Well, it's a domino effect, right, Steven? It's not going to be just, CPI numbers come out. As soon as that CPI number comes out tomorrow, they're all going to be looking at the PPI number on Thursday. And then if that also parlays into a negative number, then we'll start to see more talk about Fed funds rate and what issues might be facing our market going forward. Excuse me. All right. Let's move on here. 28. Well, I tell you, for the last couple of weeks, man, I feel like I was just struggling to carry the show for a half hour. Now all of a sudden, I'm like 28 minutes in, and I feel like we barely even started today. Motherboards use your break, not the processor. Correct. Yeah, my motherboard went out and this thing fried everything. You guys might remember my show went down. I lost so much data. It took me a while to recover on that one. Oh, thanks, Larry. Glad you liked that one. The video you did on building your own PC was very helpful. Yeah, it's kind of nice that those sites exist where you can kind of build your own PC and have it sent to you. And I think the best part is when you build your own PC, it's actually kind of fun. I enjoy it. You just got to be careful and try not to get electrostatic on everything. But then one of my favorite parts is now that I know all the components I need, I'd like to go on the little scavenger hunt and see if I can get where I get the best deals. Micro Center has been pretty good. I'm gonna say Micro Center has been really good. Okay, let's go on a completely different turn here and talk about metals. Question number 2. It says, can you take a quick look at the daily chart of FCX, Freeport-McMoRan? Great company. I think the large red candle was news-related, tariffs on all imported copper, but look at its volume. What might we expect to see on the chart with this kind of move? Well, here's the chart you're referencing, and let me add on volume at the bottom for you guys so you can see what he's talking about. We don't even need to add it. You just know that this day right here, this giant red candle that he's referencing on Wednesday, the 30th of July, you know that's monstrous volume for multiple reasons. Number one, it's a giant candle. I mean, it's the biggest thing you see on the screen, but it also broke through its 200 period moving average. It broke through some pivot lows. I mean, this triggered a lot of selling. So you add on volume there. Hallelujah, hallelujah. I mean, that is a monstrous candle. It looks like the average to me, volume-wise, for this was, maybe 7-8 million a day. That candle on July 30th was 64 million. Round up to 65, right? Crazy volume. So what does it mean? I mean, can we use that as a reference point? Well, I would certainly use I'd break this apart. I'd probably go into an hourly and see if I could whittle this tail down and find a demand zone within it. So let's go, I'm going to go into an hourly time frame. I know it's going to span a whole bunch of charts here. Let's go an hourly. We'll go back to that crater day. Well, I mean, really, it's just the last hour of the day. And I could certainly refine it down, but we'll just use this as the basic right there. So I'm going to take that, drag it out here, and then carry that over to our current markets. And then go back to a daily. And all I'm trying to do is find out where did that thing really turn around? Where was the big spike? Well, there you see it on your screen. So how I'd be using this right now is, well, number one, I'm not liking Freeport-McMoRan right now as is. Look at the red line that's traversing across your screen. Right? This red line right here is your 200 period moving average, which means that the average price for Freeport-McMoRan over the last 200 days really hasn't changed much. Right? It's the average price right now, according to its 200 period moving average, is $40.21 as of today. And if I go back out here to May of this year, it was $41. So it's actually going down in value, even though we had this monstrous run. So this doesn't look good at all from a buying perspective. So I got to say, I wouldn't be interested in buying Freeport-McMoRan right now. But what about this red candle? What caused that? Well, it was the tariffs, right? We had a 50% tariff on copper imports in the United States. Well, Freeport-McMoRan, from what I've learned, gets 75% of their revenue. 75% of their revenue comes from copper. So now that 75% of the revenue is going to get cut in half because they got a 50% tariff on it. You also have other companies like BHP. BHP is about 30 to 40% of their earnings comes from copper, but it's a bit more diversified, so it didn't have the big hit here we saw. It certainly sold off some, but not as dramatic as you saw with Freeport-McMoRan. Another one that is very dependent is SCCO. This is Southern Copper Corporation. You notice they had a similar pattern right at that same day. Notice their volume was significantly higher as well, and they've certainly recouped and bounced here, but I believe they got like 85% of their revenue comes from copper. So this is obviously a pretty damaging thing when you have a tariff as significant as what was imposed on copper. But, how long will that last, right? I guess the question I would have is, at what point does that copper tariff get lifted, or will that remain in place for a long time? Because as you guys know, when Freeport-McMoRan brings that copper back to the United States and turns it into some finished products, that copper tubing is now going to have a 50% extra tax to it that will get passed on to you and me. Unfortunately, that's just the nature of the beast. So as far as Les's question, what might we expect to see on the charts with this kind of move? I don't really expect to see much. I do expect to see, especially when you look at FCX, I would expect there to be a fairly strong demand zone built into this because of the volume that was here. There was like just heavy emotion on that sell-off day. So, right now we're at 41.42. Do I look at this demand zone that looks like it's between about 39 and 38, 34? About an 80 cent demand zone there. Excuse me, I can't even talk today. That 80 cent demand zone. That would probably be my target if I'm selling puts on FCX, or if I was looking to be a buyer, that's probably how it'd be. How about the origin of the gap? Well, which gap? Because on that day, there was no gap on this bad boy. I'm a big fan of gaps and gaps filling. You can see this one back here is completely closed. There are a couple unfilled gaps that we see recently that aren't really that dramatic on this one. But typically, I believe most gaps will fill. I was tempted to add FCX, but I'm happy with CDE and Vale and don't want to be overweight. I was going to say, yeah, Larry, you probably don't want to be overweight miners right now just because of all the issues with tariffs, and it could always create problems. So you're talking about these newer gaps there, Margaret. Yeah, I would expect these to fill. Yep, the gap on FCX on August 7th. You could argue it's been already kind of closed, but I like to see full closure of them. But the price chart on that 200 period moving average is going down. I mean, we're making lower lows and lower highs since July 10th. So I'd be more inclined to think this thing's going to continue to drift lower, and I would not be a buyer of Freeport-McMoRan myself, unfortunately. Even though I love the company, they've been great for a long time. But so there you go, Les. That's how I would view it. I don't take too much from the when you say what can we see on this chart, what can we learn from the move? In my opinion, it's really just the emotion, the shock factor, which caused a panic, and typically people do really silly things during panic mode. and that could create a pretty good demand zone. But the trend is lower. Trend's lower, and it doesn't feel that great. I had a graphic up here for you guys with copper concerns. That was the concern for copper. All right, what else did I have? That was it. I already talked to you about there were no new positions put on for me for today. This is just Friday's stuff here. I have that SMCI expiring this Friday, and I've got six call options at 410 on MicroStrategy today. We can talk about that real quick and go to MSTR. So MicroStrategy with the pretty ugly looking shooting star today. It was fantastic. It was a giant green candle today. It was up well over 410. I was like, great, my shares are going to get taken away, and I'll be happy with that. We hit a high price intraday of 414.36, closing at 400.25. So not the best looking end of the day, but that leads me to our top 8 markets. Gold. Pretty ugly day for gold, even though Trump said we will not be tariffing gold. No, really? Thanks for that one, bud. That was not a surprise at all. But you had a pretty ugly candle on gold today. Talk about a bull trap. We tiptoed above those all-time highs on Friday, and then came screaming back down today. We're down 2.48%, closing at 3,404. Not great, but I've got these two lines on your screen. Let's get the moving average out of there. We've got these 2 lines on your screen here, and again, it just feels like price has been oscillating back and forth between those for quite some time. Maybe we will just continue to see it go there. How can you tariff gold? Anybody who's an importer of gold, right, who just go to import and exports, you got to declare it when you import it. So they'd say, oh, gold's coming from some mine in Africa, tariff. But not going to happen, at least from President Trump's perspective. All right, here's your NASDAQ. Even though we put in a pretty significant high today, getting really close to our all-time highs yet again, red candle formed by the end of the day, down 0.32% for the NASDAQ. And I was kind of surprised. If you look at the NASDAQ 100, NASDAQ 100, the Magnificent 7, out of the Magnificent 7, only one of them was up, and that was Tesla. 2.85% move to the upside for Tesla, which also has a pretty big-looking shooting star today. Everything else, including Microsoft, was down, or almost break even, but down 0.05. You had Google down 0.23%. Nvidia down 0.35% with a nice spinning top formation on the candles. Meta was down 0.45. Amazon down 0.62. But really, nothing that great on these price charts, honestly. You have a massive bearish harami on Apple right now after their colossal run here. I mean, just from the time they made the announcement they're going to invest $100 billion, they went up 14.27%. $28 per share move. Love it, especially if you're a Apple shareholder. Okay, let me go back to my top here and run back through. We've gone to the NASDAQ. There's your S&P up, down 0.21. There's nothing technical here I would look at and say gives me any clues for tomorrow as far as direction. It actually, if I was to hang my hat on a direction for tomorrow, hello, Zello. If I was to hang my hat on a direction for tomorrow, I'd be inclined to say we'll probably drift a little bit lower here. You can see we've got this kind of rally-based rally that popped out on the August 7th, which would lead me to believe we might come back and retest that one. Russell was better than the S&P, but not much. Really not a great-looking chart here. I guess I'll get rid of that yellow box for us. Tim Cook saved Apple's price. Yeah, he did. Cost him $100 billion, but he made probably more than $100 billion on the price improvement. Yeah, and you're going to see more people going to the White House, right? More CEOs will be going out there and doing what they can to prop up the economy. All right, 10-year bond. We saw our yield drop by 0.14%. Nothing that important, nothing special here. We'll see what happens over the next couple of days on that one. Crude oil, up 0.13%. I was staring at this one the last week and just debating whether I go to USO and sell some puts on it because I feel like oil's going to have a rally out of this lower demand zone, but I just don't feel that confident on it. And at this point, I'm not exposing myself to too much risk. And this to me would be a fairly risky one. I guess if you were to, it might be better if I just bought USO. Let's go USO here. No, if I just bought USO outright and put a stop loss down below, like let's say $71. Probably need to go higher than that, but I may update you on this one tomorrow. I may actually, I know, Margaret. I agree with you on crude oil stalling, and it feels like but normally what would happen here is it would have a bounce back up. And if I get that bounce to last me for a week, then the weekly options would be great. I'll get myself, 1+% rate of return for the week. But it's just, I want to take that chance because I have a feeling if we do break below the low of that yellow box, which is 62.17, that we'll probably go very quickly down into these lows that you saw from May 30th. And after that, you got much bigger lows. bullish, low on the curve on oil. Well, if we go to the weekly time frame here, you would be correct on that one, Rob. Right, you'd be correct. We're still low-ish. We still got a ways to go. I think there's plenty of distance to continue to go lower, especially if you look at which is what the trend has been since 2020. Lower highs and lower lows. It does feel like, we started to have some nice positive action here starting in May, but now all of a sudden starting to get a little bit weaker to the downside. So yeah, it's just too uncertain for me. I'm not willing to stick my neck out quite yet, but I might change my tune. We'll see what happens on tomorrow's session. Your dollar index up 0.25% after just a crazy wild day. Look how much that dollar index spiked to the upside. Remember, the general consensus is that with this new appointee to the Federal Reserve and Scott Bessent's view that he wants a weaker dollar, this could put further pressure to the downside for the dollar index, although the trend right now does feel like it's moving to the upside. It's kind of like this inflection point where it's like, okay, make up your mind, do something. And finally, there was Bitcoin. Bitcoin has a terrible looking candle today. At one point last night or over the weekend, it was looking fantastic. I'll bring up the spot price because that's better. Yesterday we had a really big run up in Bitcoin. It was awesome. We had a 2.42% rally. Right now, as of close today, that is a scary shooting star. Especially because we had such great momentum over the last 24 hours. Actually, 72 hours have been pretty good going since last Thursday for Bitcoin. It's been on a great trend going back to August 3rd. The beginning of August, we were at 111, and we peaked out at over 122 today. 122,000, so significant. Yeah, a very big up. It was big on Sunday, but remember, we're not looking for the daily moves. It's about the longer-term picture here for Bitcoin, and you've got more and more people jumping into it. And also, keep your eye on Ethereum because you also have a lot of, remember the Bitcoin treasuries, right? That was a big talk track. Now they're shifting over to Ethereum treasuries, and the price chart of Ethereum looks awfully good. Man, that looks so good, and I'm happy to be holding a good position of that one. All right, what's Larry say? Drill, baby, drill. It makes you want to short every time I get close to 70. 3 nice shorts on crude oil. There you go. It's just so volatile because you can say, oh, well, I'm going to go short on it. But then all of a sudden, somebody gets sunk in the Straits of Hormuz or some sanctions on Russia. And it just all of a sudden pressure and creates all kinds of chaos. All right, let's look at your economic calendar for mañana. We already know the big story. All right, the big one obviously is going to be your consumer price index numbers. But we do have something coming out at the wee hours of the morning. So for those of you who are up late tonight, in about 10 hours, you're going to have a rate announcement from the Reserve Bank of Australia. They were expecting a 25 basis point cut there from 3.85 down to 3.6%. So that should have a nice pop for your Australian dollar, but will it be up or will it be down? Now, typically, let me get my AUD USD on here. I mean, this thing's been pretty dead in the water and not having a lot of action anyway for the past few months. Going all the way back into May, the Aussie dollar looks terrible, right? I don't know if I really would expect this to have any clear, decisive action. Typically, when you lower the rate on your currency, it lowers the value of your currency. And lower the rate on your short-term treasury Fed rate. That usually will weaken that currency as well. So if we get 25 basis point cut on the Australian dollar, my guess is you'll probably see this thing drift lower tomorrow morning. But it really has not done. What did I say, Liz? Did I say 12 hours? It's 10 hours. Yeah, sorry. Did my math skills fail me, Liz? Thanks for calling me out. Thanks for calling me out on that one. That'll be your big piece of the day is that one. And then, of course, you have the CPI coming out. And there's several FOMC members will be speaking, but I don't expect any fireworks from there. On the earnings front, let's bring up my earnings calendar, which I had open. There it is. Nothing really that important today. You had some metals companies like Franco-Nevada and Barrick Mining. Tomorrow, you do get a couple bigger names. We have CoreWeave. Oh, yeah, CRWV. We'll bring up that one here in just a second. Look at that. You have CoreWeave. You've got Circle. We're talking about Circle Internet Group. Man, I'm really curious what happens with that one. So if we look at CRCL, it's been drifting lower. And, of course, we've talked about this so we're blue in the face. And this thing is way overpriced for what it's doing. It's all off the expectations of them maybe being the number one player in stablecoins. But that's not going to happen for another couple of years. Right? They're number 2 on the list behind Tether by a wide margin. I believe they're about $90 billion behind Tether. And these rules from the Genius Act won't go into play till next year. So long time. My guess is this will continue to drift lower. And then you have CRWV, CoreWeave, which had one of the most phenomenal runs back in April and May. Gave back a good percentage of it, and all of a sudden ripping back to the upside here. So this is one I don't trade. A little too volatile for me, but there you go. More like in just over 4 hours. No. Not 4 hours. It's just after midnight, right? So I'm out here, and that's Pacific time. So it's 2 o'clock right now, so 10 hours. Yep, it's about 9 hours and 45 minutes. We should get that rate announcement. I know, Big Ab. I know. Okay, that's going to do it for me, everybody. Les, thank you for the questions. Thanks for the participation today. A 46-minute show. Not too bad. We'll maybe get to back. If I get up to full strength again, we'll go do some 1-hour shows here maybe later into this year. But for now, that's it. You got CPI numbers tomorrow. Be careful. And Les, thanks for steering the show today. If you have a topic or something you want me to cover on tomorrow's show, just let me know. You can always send them in at tradermerlin@gmail.com, and I will check those out, add them to the show, and make for more engagement. You guys have a fantastic trading day tomorrow. I will see you tomorrow. Take care.